Hi, this is George with Avalara. Today we'll be talking about economic nexus and the future of sales tax. So quickly, let me just go over the agenda. We'll go over a quick intro. South Dakota versus Wayfair ruling, exactly what it is. Economic nexus, what should you do? Automating sales tax compliance. And any questions and that story about me. I started with Avalara about 2.5 years ago, but I've been doing this for the last 11 years. Fortunately, I love what I do, and my job is really just to educate partners and their clients as to ever-growing changes. I'm not a salesperson, so if you are interested in something and I don't know the answer to, I'll have a sales rep reach out to you to talk a little more in depth. But the advantage is that I don't have an agenda in terms of trying to get you to buy something. This isn't a salesy presentation. So I'll just go over quickly for the next 30 minutes or so. I don't like to have a webinar go too far in, just because sales tax is one of those really exciting things that I'm sure everyone wants to listen to for an hour. So I just keep it to the point and maybe throw in a little fun facts just to keep it entertaining. But South Dakota versus Wayfair is really something that has changed the dynamic and landscape of companies as a whole over the course of this past year. The case originally started in May of last year with Wayfair versus South Dakota, and the decision came in June. And there was sweeping changes that have really affected 25 years of sales tax laws, and it's affecting companies in quite a few ways. But first, before I go into South Dakota versus Wayfair, what I really need to talk about is North Dakota versus the Quilt Corp. Now, that's a Supreme Court case that was in 1992. The Quilt Corp versus North Dakota, North Dakota asked the Quilt Corp that please, to our residents, please collect sales tax and have them remitted to us. The Quilt Corp argued that, well, we don't have a physical presence in North Dakota, so we really don't have to collect sales tax. Well, the Supreme Court heard the case, and they decided, well, since there is no physical presence in North Dakota, the Quilt Corp did not have to collect sales tax. Now, what they also did is they left each state into interpretation as to what physical presence meant. So fast forward 25 years, now you have South Dakota versus Wayfair that had the exact same argument. South Dakota said to Wayfair, hey, you're selling to our residents. We need you to collect sales tax. Wayfair says, you know what? We're going to reference you to the Quilt Corp versus North Dakota ruling. It says we need a physical presence. We're not required to. Well, it went to the Supreme Court, and this time the Supreme Court did side with the state, saying, yes, you are required to collect sales tax. And there's one very stark difference between 1992 and today. That difference is the internet. So the internet has literally changed the landscape of how people conduct business. And for the last at least 10 to 15 years, you're looking at companies like Amazon, eBay, whatever online retailers are just selling things, and they've had an unfair 8 to 10% advantage over any other brick and mortar retailer. So because of that, they realized that the states really did need to change sales tax law. So what it did is it granted the authority to impose sales tax obligations to out-of-state transactions. And what happens is that people who are not currently registered within the state now have to meet certain threshold requirements. So annual sales in excess of $100,000 or 200 transactions must now register within the state of South Dakota alone. Now, I reference South Dakota because every state is different, and I'll get into that in a little bit. But the most important part of this ruling is that physical presence rule has been overturned. So what it does is it adds economic nexus to the existing list of nexus creating activities. So when I say that, it doesn't replace what's currently in place. So if you have a remote employee that's living in North Dakota or is living in Tennessee or New York or Kentucky, that automatically triggers Nexus, in which case you have to collect sales tax. Or if you're at a trade show, let's say you're in Nevada and you're at a convention in Las Vegas, and if you're there for a certain amount of time, you will be required to collect sales tax. But it adds on to that requirement. So it's not any longer just a physical presence act, but it's also an economic. So it doesn't change what is tax exempt. So things like foods are tax exempt, and they'll stay tax exempt. It'll apply to service providers, and this is a huge impact because service providers usually were exempt because they didn't need a physical presence anywhere. But so now, as South Dakota charges many services, now services will be taxed, and also apply to manufacturers and wholesalers who sell it directly to consumers. So economic nexus, and why is that important? The states really went after these online retailers and service providers because they're at a deficit right now. 32% of states are currently operating at deficit, and 47%. And the reason why is because no one's ever gotten elected by saying, hey, we're going to increase your property taxes, or hey, we're going to raise your income taxes. No one's ever gotten elected by saying that. Sales tax is the easiest way of collecting revenue without, quote unquote, too much blood on their hands. So economic nexus is just a tax collection obligation imposed on sellers based on economic level activity within a state. So unlike physical presence, it's based entirely on sales revenue, transactions, volume, or both. So it varies from state to state, and it levels the playing field between brick and mortar businesses and out-of-state sellers. So here's an example of what happened. So if you look right here, the decision actually came in June of 2018. Well, as of July 2018, you're looking at 19 states that adopted this economic nexus activity, this economic nexus policy. Fast forward to October 4th, 2018, you're looking at 29 states. Now, January 2019, you're looking at 34 states. And now you're looking at 37 states. So the ones that are coming up most recently are Pennsylvania and Arkansas are coming up July 1st, 2019. In October, you're going to have Texas. And every one is going to have different limitations, different requirements. And I'll give you an example of that in a bit. So it really is changing the landscape of economic nexus, and it's not a question of if it's going to get triggered, it's a question of when, you know. So what you're looking at, what can you do? Well, first you should contact your SALT CPA. Your SALT CPA just stands for a state and local tax CPA. You can't really use your regular CPA that isn't a specialist because there's so many tax laws that have changed over the course of the year. Last year alone, there were 12,000 sales tax changes. And with that many different types of tax law, we do not have the easiest tax law in the world. So because of that, you really do need a specialist, and they focus on state and local taxes. And I'll show you a few examples as to why that's confusing to begin with. But if you don't have one, contact us. We do have a tax advisor service at a really inexpensive cost that can assess your business and see exactly what your liabilities are from a business standpoint. So, and then also what you have is we have a frequently asked question guide, economic nexus guide, and videos and blogs. And this is one of the heat map that I just showed you. And what I can do is just click on that really quick and show you exactly what I'm talking about in terms of this economic nexus in different states. So give me a second here. Okay, here we go. So another way to go to this page is also by Googling Avalara and Wayfair. And if you Google that, you'll come to this page as well if you don't have the link. So right now, here's the Nexus by state map that I showed you. And the reason why I wanted to show you this page is because if you scroll down, here they have a list of states and the thresholds. So let's take, for example, South Carolina. South Carolina has a requirement of more than $100,000. It doesn't do 200 separate transactions like South Dakota does. Here they say, you know what, I don't care if it's one transaction. If it's over $100,000, you have to collect sales tax and you have to register with the state. Then you look at other ones that are North Carolina, for example. Here it's more than $100,000 or 200 or more separate transactions. So it doesn't even need to be $100,000. In North Carolina, what it is if you do 200 transactions that total $30,000, you still have to register with the state if it's over 200. So every state is going to be different. So take, for example, let's just look at Georgia. Georgia is more than $250,000. And then it drops down to $100,000 as of January 1st, 2020, or 200 more retail transactions. So as you'll see that every state is different. California, it's more than $500,000. So these are all different activities, different thresholds that you're gonna have. And how do you keep up with that? It can be confusing at best. So just know that that's there for your reference. The Economic Nexus Guide, any frequently asked questions, and also video blogs. And again, as I said, I'll send you this, I'll send this deck out to Synesis, and they can forward it to you guys if you choose to have it. Or you could always Google Avalara and Wayfair and you'll come up to the same thing. So automating sales tax compliance and what it can do. Why is that important? Because tax calculations are just the beginning. You also have Nexus to where you have a requirement to collect sales tax, product taxability. There were 12,000 sales tax changes last year alone. Jurisdiction assignments. Sales tax calculations are based on jurisdictions. And with redistricting or gerrymandering, which depending on the side of political fence you fall on, those districts that keep on changing also affect the sales tax rates. And I'll show you why. That's, say you're not collecting sales tax. Well, if you're not charging sales tax, you need to collect an exemption certificate as to why you're not collecting to begin with. Audit readiness. Would you be ready to have all your ducks in a row and all the papers ready if you were audited? And then state and local tax prep and filing. And I'll show you why that's inconvenient, because any effort spent on any of these things are just a non-revenue generating activity. So sales tax doesn't make any sense. And going back to the crazy laws that the United States has and why it can be difficult, I'll just show you some of the more funny type of examples. So take, for example, a bagel in New York. Well, a bagel is considered a food, so it's tax-free. However, if you slice that bagel in half, all of a sudden there's a tax associated with it. And the reason why is because it's prepared food, and prepared food is taxable in the state of New York. Take a candy bar, for example, in Indiana. If you buy a Hershey bar in Indiana, well, it's considered a candy, so it's taxable. However, if you buy a cookies and cream Hershey bar, all of a sudden that is tax-free. Why is that, you ask? Well, because there's wheat flour in that cookies and cream Hershey bar, and wheat is a subsidized item in the state of Indiana, in which case it's tax-free. Donuts in Texas. If you buy 5 donuts for less in the state of Texas, it's taxable. However, if you buy 6 donuts for more, all of a sudden it becomes tax-free. Now, why is that the case? It makes no sense whatsoever. But these are the laws that are in place. But it's not just limited also to products. It's also services. So take, for example, snow removal in the Midwest. It's taxable in Ohio, but exempt in Illinois. Or tree trimming in California. The lights are taxable when you use the lights. But if you're just using labor alone, that's tax-free. Now imagine being a controller or someone in the finance department trying to calculate what sales tax rates to charge certain customers in different states. In different states, there's so many different funny laws that it's really a non-revenue generating activity. And someone in that department could do something a little bit better with their time, like streamlining their accounts payable department, or streamlining their accounts receivable department, or looking at the feasibility of bringing a product to market within a certain demographic. that's a better use of someone in finance's time that is a revenue generating activity. So look at software. Software is also something that is taxed 450 different ways across 45 categories. So whether it's canned software, whether it's delivered or downloaded, makes it different. Whether it's custom software on tangible personal property or not, whether it's customized software that's downloaded or canned software. And then also, of course, cloud-based solutions that are also taxed in different rates in different ways. Imagine being a software company trying to figure out what the correct sales tax rate is. So let's say you're just set on calculating your own sales tax rates. I'm going to show you why using the zip codes are inaccurate. So take, for example, Denver. Denver has, what, 6 zip codes. Let's take Greenwood Village, all right, 80111. You would think that, okay, I'm just going to use that one zip code and that'll be enough for my rates, right? Wrong. And the reason why is because you have 5 different districts that you would have otherwise missed. Look at this orange section right here in a sea of green. You know, and this is all about redistricting. We're gerrymandering. Doesn't matter which side of the political fence you're on, but that's what it comes down to. And because of that, you have different sales tax rates. So if you had just done one zip code, there's a chance that you can miss 2 different counties, 3 different, three different cities, and then several district taxes that you would have otherwise missed. And because of that, we use geo-based GPS locations to where we'll actually figure out exactly where your location is based on the GPS coordinates, not a zip code, which is what we feel is a competitive advantage. So let's say you're gonna decide to do these sales tax returns because now you have these limits on other states. You know, before, you didn't have to register the states because you didn't have physical presence. Well, a lot of our customers have gone from having to register in 3 to 4 states, which is manageable, to having to register to 15, 20, 25 states. Well, because of that, now you also have to file those state tax returns. Well, I'm going to show you California state tax return. California state tax return. Page 1, page 2, page 3. Now, what you'll look at right here is that you have to break it down to city level. And the problem is every city has different rates. How much time is this going to take for you to do? Is this the best use of your time? This is just a non-revenue generating activity. We had someone that works for Avalara who has been a CPA for the last 30 years. She's been doing this constantly for 30 years, and this took her 2 hours to do. So Avalara is the only end-to-end sales tax solution. We obviously calculate rates. We do 6.7 billion transactions. We also have 18 million exemption certificates that we manage. And then we also file returns. So we're the only end-to-end solution that covers one end to the other. And in this day and age where security and privacy are a very big thing, keeping everything in one area, in one secure location, really gives companies peace of mind. So we're accurate. We're an end-to-end compliance solution. We're the only company that is an end-to-end solution. And we're reported and managed in the cloud. So we're not a company that is a tax company that does technology. We're a technology company that does taxes. And the reason why that's important is because we pride ourselves on being the most streamlined and integrated solution out there, which is why we have over 600 integrations into different ERPs, POS systems, e-commerce, billing, and CRM systems. And we are a custom solution. So it comes down to whatever your needs are, we can fit a solution into. And here's some of the logos that we have. And I would dare say that you've definitely used one or more of these within the last month. Whether you're doing marketing automation with Marketo, or whether you're using your CRM with Salesforce. Maybe you're wearing Adidas sneakers, or maybe you're just using those Post-it notes on your desk. We have different labels, and whether it's an SMB type of account to enterprise level accounts, we have something for everyone. So don't think that you're left out because of your certain size. So that's all I have. Again, I just try to keep this really high level. I know sales taxes is really exciting, but you should know the changes that have happened. And I welcome any questions that you may have. Thank you for your time. I appreciate it.